This idea that you should split your mortgage in half and pay every 2 weeks is actually a bad idea. Let's talk about it. So you may have heard this old adage that if you take your mortgage, split it in half, and you make payments every 2 weeks, then basically at the end of the year, you end up making an extra payment, and that can shave off your mortgage faster, therefore saving you money. But is it really a good idea? I'm gonna make the argument that it's not a good idea, and here's why. When you have a mortgage, you have what's called an amortization, excuse my pronunciation, schedule. What that means is a portion of your mortgage goes towards principal, part of your mortgage goes towards interest. However, it fluctuates over the course of that 30 years, right? So you have the start of the mortgage right here. Then over the course of that 30 years, you keep making payments, and it's zero. So let's say you had a mortgage of $750,000. So back here, it's zero. Your mortgage schedule is actually split up, let's call it into thirds to make math easy. So you have the first third, and the second third, and the third third. Here, you're paying more interest. We'll call it more I. Here, it's probably about 50-50. And here, you end up paying more principal, right? So why is this important? Well, because the banks know that the majority of people only live in their homes and only move every 5 to 7 years. And if they're not moving, chances are they're gonna refinance. So the bank needs to make as much money as possible up front because they know they're gonna lose out on all this interest going back. So if you had a $750,000 mortgage, let's say it was at 6.5%, your payments are gonna be roughly $47.41. Now it's $47.41 all 30 years. That doesn't change. What changes is what percentage of it goes towards the principal versus interest. Now, when you're making payments and you're trying to pay it off early, all you're doing is shaving off time on this end, the time when it's more principal and less interest. So are you really saving anything? The answer is yes, but isn't enough to justify it, right? So I ran the numbers. Typically it's between 5 to 7 years, depending. So let's call it an even 6 years. You shave off 6 years off your mortgage. Congratulations. You saved about $46,196.91. Now you're probably thinking, that's a big chunk of change. But the problem is, this is over the course of friggin' 24 years. Are you gonna live in it for that long? Are you gonna own it for that long? Are you gonna refinance? There's so much that can happen in that 24-year span. Now, let's break it down even more. If you want to take a look at the savings, you can split that over the course of the 24 years. That's per year, $1,924.81, and that's, for 1 year. Or another way to look at it, on a month-to-month basis, congratulations, you basically shaved off $160.41. So the reality is, if you're gonna pay off the mortgage in full and you wanna get it done, the real savings is somewhere within this first third of the mortgage cycle. Anything after that, your diminishing returns start to kick in because you're paying more principal anyways, and the principal is free. Like, you have to pay that regardless because that was part of the purchase price. Then the next thing you have to think about is you're making this extra payment of $47.41 every year. Then you can talk to any financial advisor, any smart one anyways, and they're gonna tell you, look, where can you put this money that might be to better use? Do you own your own business? Could you use that towards marketing efforts to generate more sales, right? So if your interest rate is 6.5, what if you put that towards marketing efforts and now you're really getting a 10% return? Are there investments you can buy with that money, right? Could that go towards savings, paying off more important debt, that maybe it's a major car loan, student loan debt, anything like that? Maybe you could pay off a vacation, right? People often think it's all about paying down debt, but you also need to travel. You need to see the world. You need to enjoy life. And if that money can go towards that over the course of those 24 years, and you get to spend this to go travel to Europe, travel to Hawaii or whatever, and yeah, it may not be the full amount, but it helps, then you're gonna have a much more fulfilling life over the course of that 24 years. So basically what I'm saying is, you're most likely, and again, every situation is different, talk to your financial advisor, talk to your tax guy, whatever, but really at the end of the day, you're far better off not paying off the mortgage early. Take advantage of the tax benefits of being able to write off that interest and go live life. Go buy another property, go do stuff. Don't worry so much about this. So love to get your thoughts. Go ahead and comment below. Don't forget to like this, subscribe, follow wherever you're watching this. I really appreciate it. And you guys have a good rest of your day.